Welcome to the Algo Trading Strategies channel. In today's video we are going to explore a long-only strategy that is based on the daily and the weekly open prices. So I'm going to explain the rules of the strategy in a short moment, but if you don't know already the goal of the channel, it is to find the best technical indicators based strategies and to trade a portfolio, a well-rounded portfolio of these strategies in order to grow an account in a very steadily fashion to avoid as much as possible the drawdowns, to have a nice and growing to the upside equity curve. So to do this, in the past videos, I have backtested a lot of technical indicators based strategies, usually long only and usually on Bitcoin also, but also on Ethereum. So for example, the simple moving average, the exponential moving average, the Kaufman adaptive moving average, some other moving averages also, and also the RSI, relative strength index, the ADX, so average directional index, and some other technical indicators as well. The goal is to collect many strategies like that, and each and every one of them tries to capture some nuance in the price action. So for example, today I tried to capitalize on the daily and the weekly open. So as you can see, I've drawn here in the weekly time frame some opened. So this is essentially for the two last green candlesticks here in the weekly time frame. So you have the blue line here, the last blue line, which is the open price of this weekly candlestick. If I switch to the daily time frame, you could also see the other one for the previous weekly candlestick. So here in blue, and in fact I have also added the daily open prices in orange. So this is almost the same, that's why we don't see this first blue line here, and also some other daily open prices, and that's what we are going to rely on for the strategy's rules. So the rules of our strategy today are very simple. In 2 hourly, we enter when the candlestick, the 2 hourly candlestick, closes above the blue line and also the orange line. And finally, I have added another filter in 2 hour. So we are going to trade the 2 hourly candlesticks and simple moving average that is going to act as a filter. So we are going to enter longs when the 2 hour candlestick closes above that white line. So I repeat, it has to close above the blue line, above the orange line, and above the white line as well. And for the exit, we simply exit the trade when the candlestick closes below both the blue line and the orange line, or the white line. So to summarize, we enter when we are above the blue and orange lines, and also above the white line, and we exit when we are below the blue and orange line or below the white line. So like this, we try to capitalize on a bullish momentum that's based on the time, so the daily and the weekly time frames. And by adding a simple moving average also, we try to filter out the prices that are below that white line here. So in our backtest, we are going to vary the length of the simple moving average also. So let's look at the sensitivity heatmaps. So here is the sensitivity heatmaps run for the 2 hourly candlesticks with the rules that I just described. The first column is the multiplier, it's in fact the return, how many times we just multiply our capital over the whole backtest. For example, for this rosiest area here, we 10x our capital from, for example, a starting capital of $1,000, you would end up having $10,000 at the end of the backtest. And the right column is the Sharpe ratios. So if you don't know what's a Sharpe ratio, it is simply a risk-adjusted return performance metric. It is annualized here and it is considered good when it's above 1. So the y-axis represents the simple moving average length in a range from about 20 to 1000. So I explored many backtests here. So essentially when the SMA's length is low, this white line reacts faster to the price, and when the length is high, this is a long-term, if you will, filtering simple moving average. So when we take a look here at the left column, we can see that there are almost 3 rosiest areas. The first one for a length of around 230 or so, a second area where you could choose the simple moving average length of around, let's say, 500 or so, and the third smallest area here with a length of 720 or so. In all 3 cases, we have Sharpe ratios that are above 1, so pretty good. And also, it's not shown here, but the number of trades is a lot. So we have usually more than 500 trades or so. So this is quite good. If you don't know already, I have a threshold for myself that I want for the strategies that I backtest. I want more than 100 trades, ideally much more than that, but here we have a strategy that yields a lot of trades, so that's very good. It lets us have a statistical conviction into the strategy. So the more trades, the better usually. You don't want a strategy that trades too rarely in the backtest and then trade it live. It's very risky to do that. So you can see that the return multipliers are usually around 10, so we do a 10x over the 7-year long or so backtest here for the Bitcoin price. So this is quite good overall, even though that Bitcoin itself did a 25x, starting at about 4,000 in 2017 and ending here in 2025 at about $100,000 per Bitcoin. So a 25x, yes, it's more, but you would have to handle much higher drawdowns by holding Bitcoin. So very hard to see your Bitcoin drop 70% in value denominated in dollars, whereas with this strategy today, you would have a much higher Sharpe ratio, so less drawdowns generally, but also, yes, a lesser return. So I want to show you 3 backtests very quickly with a simple moving average length in each and every of these 3 areas here. So let's take a length of 232. That's the one I have chosen for the first backtest. So not the rosiest one here at about 242, just the one above. Like this, we don't cheat, we don't take the best backtest that we got here. We try to select a value that's just in that area. So here's the backtest with the 232 length, a simple moving average that you can see here on the top chart in blue. You can barely see it, but it's there. And also there's almost 500 trades represented here by the green dots or the green bands. So it represents when we are in a long trade. So we have here a strategy that trades a lot, and also the time in market is not very high, which is something that we could consider very good, because we don't want usually to be too much 100% of the time in the market. So as you can see, the equity curve here in blue, starting with a capital of $1,000 and ending at about $8,000, so an 8x overall, which is not too bad. So we would have suffered a bit, yes, after the 2021 peak of Bitcoin, with some drawdown here, which is very long and very flat, but also to the downside. And then the equity curve starts to grow again to the upside. Also, during that very long ranging market in 2024 for Bitcoin, we can see that the strategy holds pretty well. The performance here remains quite flat. So quite good. You wouldn't have to endure here very hard drawdowns that you would endure by holding Bitcoin. As you can see the price here in black on the top of the chart, the drawdowns are much less in the blue equity curve, as you can see. So here's another backtest with a longer simple moving average length of 500. The number of trades also is 435, so quite good overall. And the backtest here is not that bad, with almost a 10x at the end or 8x or so. And finally, a third backtest with an even longer simple moving average length of 712, and the number of trades is 425, so quite high. So yes, what I wanted to show you here, guys, is a strategy that is based on the daily and weekly open prices. This is quite good overall, and one of the main advantages that I would see here for this strategy is the time in market. Compared, for example, to a simple moving price crossover strategy, which would be long only also, we would have to spend a lot more time in the market, the spot market, obviously, because you would have to hold the trades a long time. But in today's strategy, it's not the case. You could almost trade that in the futures market, the perpetual futures market, and also, why not, use a little bit of leverage. Why? Because the trades durations are less, and so you wouldn't have to pay a lot of funding fees. So that's it, guys. There you have it. You have a strategy today that is based on the daily and the weekly opens with a simple moving average filter system. I hope you liked the video and you had some good value in it. If it is the case, please hit the like button. And if you want to hear from me in the future and see more backtests, please subscribe to the channel. I see you in tomorrow's video. Bye bye.